Hey everyone, it's Mark Ferguson with Invest for More, and Realtor.com has come out with their monthly housing report, which I love to look at because it shows us trends of what is going on in the real estate industry, and not just this year or last year, but for the last 5 years, which gives us a really good idea of what is happening now compared to not only the crazy years of 2022 and 2021, but before the pandemic when we had a more normal real estate market. So there's so much drama and panic and different things going on right now. And when we look at the numbers, we can see, especially compared to years before the pandemic, what's actually happening in the real estate market, if there is cause for panic, or if things are normalizing, or if we're going back to a crazy world of 2021 or 2022. All right, of course, we love seeing new subscribers and likes and all that great stuff. A lot of my videos are actually my own properties, rentals, flips, investment properties, businesses, and so I love to see what's going on in the market for my own knowledge and well-being as well. So every month, Realtor.com comes out with this marketing report, has tons of great data, and I know there's always going to be people who say, of course, realtors say that everything's going great. Well, this is data, right? This is hardcore data. They're not lying about the numbers. It's really good data, and good realtors can make money in any kind of market, to be honest. And they don't have the power to push prices up. Honestly, the last few years have been really, really hard on realtors, and prices going up isn't always a good thing for them. What realtors really want is lots of activity. They want lots of listings, lots of buyers, lots of sales. That's how they make money, is selling houses. And a house selling for $20,000 more is not going to really be that big of a deal to most realtors. What's going to be a big deal is being able to sell more houses. So honestly, most realtors would rather have a normal market where there's way more houses for sale, where prices probably aren't as crazy, and things are more normal. So there's not like a lot of incentive for realtors to push up the housing market. What they really want is more sales and more properties to be listed. But here are some key points from April and Realtor.com. The number of homes actively for sale increased by 48% compared to last year. So we'll look at that. That's a crazy stat, but we'll show you why it's maybe not quite as crazy as it sounds. The total number of unsold homes, including homes that are under contract, increased by 6.3% compared to last year. So a few more unsold homes. Home sellers were less active this April, with 21.3% fewer homes being listed for sale compared to last year. So way fewer houses are being listed. Median price of homes for sale increased by 2.5% annually in April, lower than March's growth rate. Homes spent 49 days on the market, which is 17 days longer than last year, but still shorter than before the pandemic, which I think is very important. A lot of people are saying we're in a crash, the real estate market is horrible, because they use year-over-year statistics and compare to 2022, which was probably the craziest real estate market ever in the history of the United States, with crazy amounts of buyers, hardly any listings, really low interest rates for the first part of the year, and it was just insane. And that is not what a normal market is. So if you compare a normal market any normal year to 2022 or even 2021, it's going to look like a crappy year. But if you compare it to other normal markets, it doesn't look quite so bad. So active listing count, like I said, I love these charts. The blue is 2017, the orange 2018, the red 2019, the greenish blue 2020, green 2021, yellow 2022, and pink 2023. So at first it can be confusing, but we'll try and show you through here. So this is 2022, this yellow line right here. And then it goes all the way to here, that's the end of the year, and it starts again with pink right here in 2023. So this is active listing counts. How many houses are for sale in the entire country? And you can see 2021 was crazy low, record low amounts of houses for sale, incredibly low. And you have to remember, this is all happening while the population is increasing. So yes, the birth rate has decreased, but population is still increasing in the United States because there are still more people being born than dying, and there's way more immigration than there used to be. So the population is increasing while you're having record low listings. 2022 started out even lower. This was the crazy part of the year. And then interest rates increased and you saw more listings and then we started to see a decrease in listings. And so far this year, we have also seen a decrease in listings in kind of a flat spot. But what's really interesting is this is 2020, 2018, 2019, 2017. These were pretty normal years before the pandemic. Most places saw prices increasing moderately. There wasn't a crash. There was nothing crazy going on. There is still 50% or less active listings than the normal market. There are still no houses for sale, and it's not like it's increasing significantly. Look at this. Most of these years are actually seeing an increase in listings in the start of the year. We're seeing a decrease. It's even more competitive than a normal market, if I want to make that statement, which seems crazy, but it's really what's happening. Now, if we move on, the total listing count, that's the total amount of listings, which includes homes for sale, under contract, and that is increasing, as you can see. But again, this yellow one is 2022. Pretty big increase, but again, nothing crazy compared to a normal year. And then it decreased, just like it did every other normal year. And then it's kind of increasing, just like it did every other year. Nothing crazy, except again, there's maybe, 60% of normal? Still, very few houses for sale. All right, pending listing count. These are properties that are under contract. This one's kind of hard to see. 2020 was crazy because COVID made this giant dip, and people that were under contract pulled out of their contract. But then we can see here's 2022, which actually saw a lot of houses under contract compared to previous years. A lot of buyers, so many buyers then. And then we pick up here, again, very normal looking chart, right? This does not look abnormal at all compared to the other years. 2021, 2022 saw way more houses under contract. There are just a lot of buyers, a lot of people buying. And now, look, almost equal with those normal years before that. And if we keep ticking down here, newly listed homes, this is important. And what you see with high interest rates, because a lot of people will claim higher interest rates automatically make prices decrease. They don't. They say supply and demand. High prices make supply and demand out of balance, and prices will decrease. High interest rates decrease demand. That is true, but it decreases supply as well. So there's two sides to supply and demand, not just supply or demand, but both of them together. And if you increase interest rates, it decreases demand, but people stop selling because they don't want to give up their 2% rate. We've heard this over and over again. I've been talking about this for years, literally saying when higher interest rates come about, it happened in the 70s, happened in the 80s, happening now, people stop selling their homes because they don't want to give up their low rate. And building slows down because it's more expensive to build. There's more concern about if buyers are going to buy. Building slows down, which also decreases inventory. And if building slows down now, it's just going to make the housing crisis worse in the future because there'll be fewer houses. And that's what we need, is more houses to help house all the people and meet rental and owner-occupant demand. And so high interest rates actually can make the housing prices higher. I know it seems weird, but in the long run, when you have less building, that means there'll be less supply later on. When we do return to lower interest rates, which will happen eventually, if there is a big, massive buyer demand, there's going to be fewer houses in the future than if we had had low rates this whole time and there was more building going on this whole time. I know it's kind of counterintuitive to a lot of what a lot of people are saying, but if you shrink supply and kill supply, and demand goes back to normal, you're going to be way out of balance again, way out of whack, and it could cause a huge jump in prices again. So newly listed homes, record lows, except for 2020. All year long, most of the end of last year was way below every year for newly listed homes. Again, it is, look at this. This is actually growing at a slower pace than every other year except 2020 when it was crazy and everybody stopped doing everything. Like, what is that? 60? Almost 50 to 60% less. I mean, it's crazy how few homes are being listed. And if there's fewer homes listed, supply and demand isn't out of whack. It's actually still too many buyers, too few houses. If we keep scrolling down here, days on market is one people like to talk about. All of last year, we talked about how days on market was increasing. 2022 is yellow. We saw record low again at the start of the year. Then it started increasing. People said the crash was coming. Well, every other year did almost the same thing, except for 2020, which was kind of crazy. It still increased at the end of the year. Every other year, as you can see, increased at the end of the year. And then it got to this point, and just like every other year, January comes along, boom, it drops again. Sorry, we're pink right here, sorry. Pink was up here, boom, dropping just like every other year. We see a decrease in days on market. It looks so similar to these normal year charts. There is not a massive amount of houses on the market, and it's just not doing what a lot of people thought it was going to do, because honestly, it did the same thing in the past, and people just said, nope, that the past is different. It's not going to happen again. Well, the past is repeating itself again. Median listing price has been increasing. Again, it kind of peaked summer of last year, and then it started decreasing. People said the crash was coming. Well, look at every other year. Slight decreases. Maybe not as much of a decrease as last year, but those years also didn't have the huge run-up that last year had either. And overall, we're still above year over year last year, even with the crazy increases there. And while we saw that decrease at the end of the year, look at this. Every single other year, it starts to increase again in the January, February, March. It's exactly what it's doing right here. And you can kind of see, right, the rate of increase is not as high as compared to last year. Last year's crazy. But if you look at that rate of increase to the normal years, almost the exact same thing. And it's still increasing a little bit. Price reduced share. This was another one that was all over the place. Record amount of price reductions. Price reductions are showing the market is crashing. There's always price reductions. There are always price reductions, and we can see here, historically, yellow is 2022. There was a huge spike. I hate the word spike now, but there was a huge spike in price reductions when rates went up. Yes, and there was a little bit of maybe even panic from sellers thinking the market's going to crash and they had to sell fast. But it evened out. It kind of peaked right here. That's 2018, by the way, which was not a crazy crash, a crazy year. And then boom, huge decreases in price reductions, just like almost every other year. Pink shows up right here. The red is 2019, by the way. And look at this, a big decrease, a bigger decrease in price reductions than every other year we've had, pretty much. So that huge spike in price reductions has taken an opposite dive, and now there's fewer price reductions, at least relative to how quickly the price reductions went down. There's still more price reductions than 2020, 2022, 2021. But again, those were abnormal years. Those were weird years. Fewer price reductions than the normal years before the pandemic. All right, so that was Realtor.com. Now, what about my local market where I can get direct access to MLS data? It's really cool. We'll just do Weld County here and add that area. We'll take off that, hopefully. All right, so different charts to look at here. We will go back 5 years, because that's pre-pandemic. New listings. There was a big drop. Now it's pretty normal. Everything pretty similar, right? Nothing crazy. Homes for sale, the amount of houses for sale. Again, these were normal markets. Nothing crazy here. Huge drop the last 2 years. And then big increase. Got close to normal. And look at this. Back down again. We're back to below the couple of years before COVID. But then 2018 right in there. Nothing crazy. Under contract, had a big drop here. It's back up again to normal. Closed sales, that kind of decreased a little bit. You see less sales when interest rates go up. That's true. There are less sales. Lots of people say the real estate market is crashing because there's fewer sales. Fewer sales doesn't mean prices drop. It just means less properties are selling. Days on market, again, here's before the pandemic. Huge decreases. We went up higher, but again, look at this big drop. The last couple of months, things have gotten much more competitive again, and we are at a lower days on market than normal right now. Months supply, same story. 1.5 months supply. Not enough houses for everybody out there. Usually like a normal supply they say is like 6 months or something like that. Not even close to that. Let me see if I can go out farther. max to 2014. Yeah, I remember saying in 2012 and 2013 there weren't enough houses, and there just haven't been enough houses since then. It's just kind of crazy. Sale price. You can see the run-up in sales price here. Huge run-up in 2022. We did see some drops, and boom, back up again, levels out. But that is not a crash. I mean, you can see this too. Every other year, it's maybe not quite as pronounced. It goes up and down, up and down, up and down. Prices do not always just go up continuously. And just because we've seen some downturns the last part of the year doesn't mean it's going to keep happening. It usually goes up and down constantly. Price percentage of original list price back up to 100%, meaning we are getting multiple offers again, over list price offers again on some properties. Dollar volume, the sales volume is actually pretty good considering how high rates are. And this is an interesting one, price per square foot total. So this is more about not just what type of houses are selling with median price, but the price per square foot. It peaked at 209, then kind of dropped, boom, back up again. And if I looked at just Greeley's actually at a record level of price per square foot. This is Weld County here in Colorado, but things are not going crazy. Shows per pending, very normal. Shows per listing, very normal too. So overall, the real estate market is very solid right now. It is probably doing better than most people thought it would, considering rates went up. And if rates do go down, I would not say it's out of the question to see a big run up in prices again, because there's just not enough houses. And with rates going up, building decreased, there's less inventory, less houses on the market, and it probably made things worse, even though the Fed, Powell, said they wanted to stop the rate of increase of inflation by raising interest rates and stop the rate of house price increases. Really what they did is made it worse, because they limited demand, they slowed down, they limited supply and demand. They limited demand, but they also limited supply. And when you limit supply, it's almost impossible to make prices go down. And in fact, it usually makes prices go up. And it's really hard to catch up on supply with houses. It's hard to build houses. Government doesn't make it easy. Labor is hard to find. Materials are hard to find. The process to build a house and create subdivisions and planning and zoning is really hard. And so if they slow that down, it's not like you just turn the faucet back on and it bumps back up. It takes a while. And by slowing down building, they probably made the housing crisis worse, if you feel the housing crisis consists of not enough houses and prices continuing to go up. All right, so that's the monthly report. I've kind of looked at and analyzed. Let me know what you think. Let me know what you see in your market too. Love to hear from you. Of course, all the likes, comments, shares. Love seeing new subscribers too. And I'll probably try and do this every month if I can. And of course, I'll have other videos of my properties, rentals, flips, businesses, and other cool stuff too. All right, thanks for watching.